Gentlemen, bam. Let's take a look at this now. Boom, we are alive, ladies and gentlemen. Another great episode for you today. We're going to be going over Bitcoin, Ethereum, Litecoin. Wait, hold on. Everything works. Okay, there we go. Yeah, you can never tell with these live streams. It's always a little tricky. They make you go live like 10 seconds before you actually go live. Anyways, unimportant. We're going to go over Bitcoin today. And more importantly, we're probably going to start with Ethereum. It's always good to create counter conjecture. I think it's important. Now, the lines that you make the counter conjecture from are obviously just as important as the conjecture itself. If what you're building the idea of your thesis off of isn't necessarily credible right from the get-go, you're probably just wasting your time. But what we're going to do here is dive in and take a look at Ethereum. So I have Ethereum open on the chart right now, and one of the reasons why I wanted to make this is because if you can't tell, I've actually changed the drawing just slightly. So in our private members group, this is a nice part of our PDF called distribution. Now, distribution itself is fractal in nature, and it can occur in many different areas. Now, I'm going to go back and we're going to do a retrospective study and analysis because so far we've done great at following the markets. Now, distribution and reaccumulation are the hardest of the bunch because it doesn't give you that much time to do so. So here you can see our primary support, our buying climax, our shakeout, all the same, except here now, instead of resistance, we see upthrust and then upthrust after distribution. Although I don't see the characteristics of this leading up in the volume profile, generally here for your UTAD, you would want to see a mass amount of volume similar to your buying climax come in. We haven't seen that. So there's one check against this. But again, we do see a very clear similarity between this PDF that we produced for an ascending wedge and the way it looks like it's happening right now. Now, if we go something like this and then break back above, again, it changes this is the problem with distribution. They can look eerily similar to accumulation. But if we start to see a breakdown like this and we can't get above the box, we're probably going to come back down and test maybe as low as $500 or $600. Now, Ethereum in the long run, again, I'm ultimately bullish, but what's important to remember is that we don't always know what's going to happen in the market, and the market can trick you. So having a good strategy is important. Now, if we go out on the longer time frame, I think this is where we're going to get a much more valuable kind of allocation of understanding. So if we look at, let's pause this so I'm not wasting data. If we look at Twitter, follow me on Twitter. I thought this was a really nice one. This was a tweet from us back here in September 21st. As you can see, if I click on this one, my micro strategy is thinking large-term accumulations. This was effectively our Bitcoin chart on September 21st, and these are the areas where we started building our long positions. Now, if some of you are new to this channel, so you wouldn't have had the joy of joining us along for these early-stage accumulations. These early-stage accumulations are important for multiple reasons. Number one, they take a long time. So it gives you the chance to build your position. But number two, they're contradictory to where we are now, which is there's not a lot of time in any of these positions. Currently, we're only sitting at 32 days in this potential distribution or reaccumulation. So again, what we want to do is go over our retrospective study and remember that both reaccumulation and distribution are nowhere near as easy to define as these long-term accumulations, which we had posted in September 21st. Now, again, what was nice about this is we nailed this one. This was perfect. But again, in retrospect, accumulations versus a potential reaccumulation or distribution leave you in vastly different areas of the market. Now, one of the fun plus sides here is if we open our screen up and we go and we look at our previous Ethereum chart on the much larger time frame. This is going to become important for a few reasons, and you'll see why. Now, if you had joined us not too much longer after that, let's see, August, September, you would have remembered that we were watching this in Ethereum here as well. Now, this was a very short-term distribution in Ethereum. Let's say it's similar to what we're looking at today, where you had a type of rising wedge, effectively. Now, we had a big blow off top. You could maybe even look a little clearer here if I go in on the 4-hour. What's happened here? Oh, yeah, here we go. Okay, here we are. No, sorry, guys, back to the 4-hour. So again, what we're doing is we're doing a comparative analysis to a very temporary distribution into a reaccumulation pattern. So again, one of the things that we're not seeing right now in Ethereum in the UTAD test is this enormous amount of supply coming into the market. So in our previous screen, we had noticed again at the UTAD, which would be akin to here, is that there's no massive amount of supply coming into the market to create that. And not only that, the run up here was identical to the run up in the buying climax, which is what you're looking for. But this was one of those times where you could say, okay, well, here's a rising channel, and it broke down into a lower form of reaccumulation. So part of the question is this distribution? And again, we always want to remember that, well, first off, it's good to argue with yourself, although people might think you're a little crazy. You're going to find up you have a much better conclusion over the long term. So as we zoom out, we can see the multiple areas of reaccumulation that have taken place since we left that trading range and to where we are now. And again, to where we are now on the 4-hour here, it could go either way. Now, if we break and we just touch here the point of control and we continue higher, great. Even if we break down, a big part of the question is, well, where would we break down to? And are we going to see something similar to what happened at the $300 reaccumulation where and again, notice the declining volume, guys. This is important to remember. We don't have the true signs of a UTAD that we would want, although we do have a massive amount of supply coming in here. It was lower than our buying climax and primary shakeout. So we still see a decreasing area of supply coming into the markets, whereas back in August when we were charting something similar, we actually saw the opposite. And again, this is what leads me to believe that it's bullish, not bearish. Even though it looks like a potential bearish indicator, I have not changed my thesis in any way. Notice the volume mark here too, rising supply into this bearish breakdown. And what effectively became a new area of reaccumulation for Ethereum. And this happened twice. It happened once at the $100 area back in March when we saw our primary spring. And it happened again over here in August, where what you see was not a decline in volume, but a rise. Here you see a very clear rise in supply coming into the market right before the breakdown occurs, right? And this is the opposite of what's happening right now. So again, when we're making conjecture with ourselves, we want to do retrospective analysis, but make sure we're doing it in areas that are actually relative to our study. So for instance, if I were to go back to the previous automatic rally here, well, I don't even have it on the chart right now. It's not going to be as sensible because it's not the same part of the trading range. If you want to make comparisons, you don't compare an apple to an orange, because the only thing you're going to end up with is, well, there's seeds and there's a skin, and that's much too vague to make a good analog or analysis or analogy, more importantly, because they're not relative. I mean, they can be, right? You're like, well, look, we're in the market. There's volume and there's candles, like, so it's distributive, right? No, that's kind of totally irrelevant, and it's very easy to get sidetracked by thinking that just because there's candles and volume, it's now distributive because, well, that distribution pattern had candles and volume. Well, then everything's bullish too. So you have to be very careful when you're making an analog or an analogy about where you are in the market based off the effects that you see primarily on the volume. So even though our trading range is currently looks almost identical to the schematics of distribution in the ascending wedge, there's two major things. Number one, if it broke down here, created another trading range, what you would see is that this became much more similar to reaccumulation schematic 3, which is exactly what happened in August. Is you saw a breakdown of the reaccumulation pattern, and we saw this reaccumulation schematic 4, where your buying climax and your up thrust was then met by a much larger scale accumulation range. Now again, I don't believe that this is the case. I do believe ultimately that what we're going to see is a bullish breakout. Now, in the intermediary time, if all of a sudden supply starts to massively increase here, and we break below, especially. So again, you know, guys, part of this too is understanding that these types of trading analysis is a load harder than what we were doing back here when we were in August, right? Because when we were going from March to August, it was a multi-year accumulation pattern. Again, drastically different to the multi-week or multi-month, at this point, a month reaccumulation or distribution pattern that we're witnessing in Ethereum right now. Now, Bitcoin is in a very similar quality. Ultimately, I believe that the bull market is going to continue for approximately 180 to another 280 days based off our accumulation time. So there's there's a pointed figure chart way to do this, but you can do it with regular candle and area charts too, which is measure from the selling climax to where it took to break out, which is approximately 700 days. The bull markets are usually a derivative, or maybe a derivative. Yeah, derivative I think is the right word, of the accumulation pattern itself. So you'll see that the breakout takes usually around close to a half of that time. So that would put us approximately 380 days of bull market. It's including the potential minute distributions. So there's two major effects that could happen right now. We could see a breakdown, close below the box, and then probably hit the POC, make a reaccumulation like this, have a break below the creek, and then blow up. Either way, Ethereum is going to blow up. So none of this represents to me a point to sell or to go short. It just represents a time to build a new, much better long and potentially leverage long position, depending on what the spread on that is. But if you're new here and you bought at the top already, I wouldn't be worried, because what we're going to do is build a video out tomorrow, which I think will be extremely useful for everyone. This is a report that was done by Fidelity. It says the best investors literally forgot about their portfolios, or more important, the best investors are dead. Now, the reason why the best investors are often dead or forgot about their portfolios is because you could make an investment here, not get emotionally attached to the outcome, walk away, come back 5 years from now, and end up maybe a multimillionaire, depending on how much you put in to this game. But if you get shaken out right now because you bought here and you think I'm talking about a breakdown to here being cataclysmic for you, or if you're not even a part of the group and you make the mistake. So guys, if you're adventurous and you feel like you like learning new things, join the links in our private group down below. Remember, it's a no questions refund ask guarantee. So if you like learning through things like, are you adventurous? Are you curious? Do you like learning? Well, then join our private group. Because there's a lot to learn, and more importantly, there's a lot of people there that keep you accountable to what we're going through right now, which is still a bull market. So what I wanted to do today was go over and read another chart and a breakdown. And again, I don't think that this is actually what we're witnessing, but it does look eerily similar. And if it is similar to what happened, we actually had something happen very almost identical to Bitcoin back in August as well. So we'll go over that and we'll take a look, because it was a very small distributive profile right before we broke out. So here we are. So this is back in August. So I made the post here saying that I'm in massive accumulation mode right now. This is September 21st here. But look, we had a rounded top of a distributive profile. But if you would have sold out your entire position here and not re-entered, you got fucked. Don't get fucked being a newbie trader, right? Just because we're looking at a potential of a small scale distribution in the middle of a bull market does not mean to think that we're in a bearish profile altogether. It's actually counterintuitive, and it's horrible for most traders and investors, because most investors do better off fucking dead. So please remember, guys, like when we're in the group and stuff like this, you want to be very, very weary about using like chaotic or emotional keywords like, oh my God, we're turning bearish because there's a rounded top here, but we're in a fucking bull market. This drop here was only 17% before we went up 10x. So don't scare yourself out of your own positions. Even if we're seeing a distributive top here, like we might be witnessing potentially in Ethereum, it's going to be very short-lived. As a matter of fact, I think this is a great opportunity to look. Here, look, this was obviously a distributive top, but look how quickly it turned into a massive reaccumulation before we went king blowout, right? So again, guys, one of the reasons why the group is so important for accountability is because if you're learning and you see other people make conjecture like, oh, this distribution, you're going to do the wrong thing and panic sell. And I'm trying to like manage the group's emotion as well, because that's basically the investor's worst enemy. This wasn't distribution. This was time to double the fuck down on your Bitcoin position. And that's literally why we posted these charts so blatantly here on Twitter. Like, my strategy right now is accumulation. I think I posted this originally on Michael Saylor. I was like, yeah, my micro strategy, large accumulations. And that's exactly what this was. On September 21st, even though it was a small scale distribution, as we were watching here, which does effectively breach the rounded top portfolio, it went right into an area where you should have accumulated. And you could have had people being like, oh, we go to $6,000, and then you don't re-enter because you think we might go this low or some shit, and then you're fucked out of your position. I need you guys to be aware of one clear and simple fact. The human psyche is full of flaws and breaks. If you don't believe me, go read the books Psychology of Persuasion by Robert Cialdini. You as a human have many inherent flaws in your ability to break things down emotionally, and it's generally created that way for a survival tactic. it feels much worse to lose $100,000 than it does feel pleasurable to make $100,000. Now, if you've never made $100,000 or never lost $100,000, you'd probably never know. But if you ever made or lost any amount of money, you'd know that the losing of it actually hurts a hell of a lot more than the making of it. It's harder to take profits than it is to cut your losses quickly. And this is one of the other interesting parts about the whole profile too. Guys, if you have been joining us since these early days and you're up like 10x on your portfolio, buy yourself some new gear. Maybe you happen to be a stonemason and you need a new a cutter for your stone. Do that. Reinvest in your own workflow, because portfolio building is supposed to take decades. And this is again why tomorrow's video is going to be called "The Best Investors Are Dead." I don't know why I'm bleeping out some of my words, but not others. So even with Bitcoin here, we had gone over the potential for this being a bull flag. If we roll out on the full time screen here, and actually I should probably highlight Michelle's chart, although I don't know if I have it open right now. So shout out to Michelle in our private group. She shared something that was really nice, and I'll try to mimic that right now by going to our area chart. I'm a big fan of the area chart because it removes a lot of the data. We'll look at it on the daily. And as you can see here, we had multiple reaccumulations. So here's one reaccumulation, two reaccumulation, and then I think what we're witnessing right now, and this was her conjecture as well, which is look at the similarities between these breakouts. So here was your first break out of the box, quite nice, into an SOS, reaccumulation pattern, break out of the box into an SOS, and then you saw this very sharp, quick downward turn, and then massive explosions outwards. The last thing you want to do is get shaken out because someone telling you it's bearish when we're nowhere fucking near the top. Bearish and distribution patterns are way up here, which may be equivalent to $280,000 in Bitcoin later this year. So don't get scared out of your positions yet if you're new to this ecosystem. I swear to God, you're going to hate it so much if all of us... And again, look at the similarities. 1, 2, 3 reaccumulation patterns before blow up. We have 1, 2, 3 reaccumulation patterns before blow up, and then a big spike down here back in 2017 before it absolutely went haywire. And then again, this is critical to remember that these little moments here where the shakeout position is meant to get rid of you, and you don't want that. So please, guys, during these moments, if people are speaking with like emotional language and talking about bearish behaviors, recognize the difference in what we were just looking at, and realize that even though this was technically considered a distribution pattern and was considered bearish, it was momentary. And why was it momentary? Because we knew for a clear fact that right here, this little bit was just a seminal marker in what was a multi-year accumulation going much fucking higher than where we are today. Anyways, that's kind of my breakdown and analysis. I still don't think we're wrong, but was I wrong? This is a great question to ask yourself. I think it's really important to create conjecture around these ideas, and we're going to kind of finalize part of this episode by looking at this. So again, guys, you can find a lot of free stuff if you don't want to join our private group, or if you don't have the capital to do so. You can also use free stuff. And I actually suggest using the free stuff primarily because it's great to build conjecture of who you think is right or who you think is wrong and build your own confident conclusion. The goal here isn't to get you to follow Tiho down a rabbit hole. It's to follow your own discovery process and to make your own affirmed, responsible decisions so that if you want to invest in Theta and I don't like it and it goes up 10x and you didn't do it because I didn't like it, you don't kick yourself. This is for you to always build your own confidence in your own trade decisions, in your own investment portfolio. And then again, to understand that some of the best investors from some of these reports are people who just bought and walked away. This is literally the mentality of HODL. But it takes an emotional roller coaster and a rock star to get through it. And often, again, if you have made life-changing gains, you should reinvest in what you love doing. Maybe you're like a breathwork teacher and you want to build a website so that you can like bring on more clients. Well, then that should be the shit that you're putting your portfolio back into, because it's the business that's been bringing not only yourself value, but providing value to the community and generating revenue for you so you can continue to build your portfolio over the next 10 years. It is very hard to become a good trader, and you're going to lose money most of the time practicing that skill set. Just like you would lose tile learning how to become like a tile cutter. Horrible example, but makes sense to my mind. So Today, rev up with reaccumulation trading ranges. In the course of every long uptrend, there are extended pauses. The longer the trend, the more pauses there will be. And in terms of the duration, they can last as little as a few months or as long as a year or more. They are designed to torture the long-term holders with protracted periods of boredom. As with all aspects of the price cycle, Wyckofians have discovered the principles of the governing dynamics of the trading range of the extended pause. In this post, we're going to introduce the concept known as reaccumulation, which we have gone over multiple times before, and I think, again, it's worth repeating. Once a trend emerges from the accumulation, it begins to mature and changes internally. At the trend's beginning, strong holders of the composite operator of the stock are dominant, and owners are almost always immediately shorter-term traders jump on the board for the uptrend and the ride-along. These traders and types will not hold the stock for the duration of the uptrend, and they will repeatedly take profits and leave at the early signs of trouble. The composite operator, on the other hand, has the intention of staying on the trend for the entire multi-year move. And this is what I've said. We saw at least 700 days of accumulation. We can expect around a derivative of around 380 days, and we're only 180 days into this bull market. Do not get scared out of your positions when someone says, "Oh my God, look, it's a bearish indicator." When we're here in the motherfucking marketplace, you're gonna hate yourself for it. This is the bearish moment that people would have been scared of right here, and they would have missed the run all the way to $50,000 almost because they didn't re-enter their positions. So please remember, the chaotic and emotional language does not help those who are learning. We are nowhere near a distribution top. Everything we see from here on out is going to be reaccumulation until we get near a top, and it's not there yet. That's my personal belief. Maybe I'm wrong. Could be a flip of a coin. But at this current sentiment, you're not going to be able to sway me with a little bit of seminal information, because personally, I think a lot of the other people that have been studying this stuff are wrong. I watched Wyckoff Analytics and some of the Wyckoff school. They totally fucking missed this entire accumulation period. They never once looked at it, and they were in and out of trades, missing the entire bull market basically. And now they're not going to get it right again either, because they missed the entire point of where we are in the macro perspective for the entire year it took to get here. Anyways, don't trust yourself. That's the main point of that conversation. Don't trust anyone else. And if you're not willing to argue someone else's idea, you probably shouldn't bring it to the table either, unless you are really prepared to argue it. Anyways, that's my point. Again, we could be seeing a bull flag here. And again, this is a bullish indicator, not a bearish indicator. So let's see, we go something like this. We have a little bit of a run along. Maybe, again, it springs us to 20 grand. You wouldn't even be able to log into Coinbase and buy it this time. You probably wouldn't even be able to log into Binance and buy it this time. If you already have buy sets here, awesome, amazing. You can walk away and you can forget about what you're doing for this next trade. Now, if you're building a leverage trade, you don't have that type of freedom. You need to be very specific. And none of this trading range so far has given us the indicator that we want to be trading leverage here, because the last time to trade leverage was right here, and that was about it. There was a few good spots back here where you had these very tiny accumulation patterns that were only like a 10% spread effectively, 9%, 12%, and then I think this one is around 12% too. Yeah, 6% on those final trading ranges. So again, guys, the importance of the group is to remember the accountability on the long term, and then to note where you are in the macro perspective. Look, there are other people that you can listen to about Wyckoff analysis, but they missed this. And how do you miss the thing that's supposed to be the most important aspect of the entire fucking trading range, which is the accumulation cycle? We didn't miss it. I clearly said accumulation. I was screaming this June, July, August. We're in accumulation. This is a bull market. People still weren't sure if we were in a bull market. I stayed confident because I believed what I studied. So I wanted to make that a very strong, conclusive decision here, because you need to build that type of confidence in yourself. When I was buying Bitcoin back at $400 or $500 over here, and I was telling people it was going to go to 10 or 20 grand, people thought I was retarded. They're like, "Oh, you're so stupid buying internet magic money." Well, guess what? If I didn't have the confidence to know what I believed in, I wouldn't have done it. You need to learn how to build that confidence, even if people tell you you're retarded for doing so, or you're degenerate. "Oh, you're buying magic internet money." If you don't have that confidence, you won't take that position. And more importantly, you'll get scared out of it in the middle of a trade. And that's not what you want. So I wanted to make that clear, because in the group, guys, if we use emotional wording, again, this is the perfect example where we did see this moment here. We were like, okay, well, look, is this a distribution top? Wait, okay, well, it was, yes, but it didn't distribute and bring us down to $3,000 or $4,000 Bitcoin. I went short Bitcoin here and made an extra like Bitcoin or two right before the pandemic hit. Because if you look at my videos, I kept being like, guys, there's a pandemic coming. It's like January 20th, February 2nd. Guys, there's a pandemic coming. People are like, oh no, don't worry. We've had scares like this before. It's just the media overhyping shit. I'm like, okay, I'm going short. That was the last time to go short. I went long. I started to go long again here after 7,500. I was like, okay, I guess this is the bull market. I figured it out. This is the psychological spring. Again, you have to have your own personal confidence. And I don't mean to rag on anyone, but in the group, we want to be really careful with how we call things bearish. When if you're just going to see like a very temporary turnaround and someone sells their position hoping they're going to get back in, and then they can't because Coinbase is down or Binance is down, you've helped screw them over because they weren't emotionally confident enough. And that's what we're trying to build here right now, is that emotional confidence to understand A, where you are in the market, and B, what you can do by knowing where you are in the market. Okay. So, yes, I'm not trying to pick on anyone. I just think it's the perfect example to go, like, be careful with how emotional you get and what words you use. Not even if this is like a temporary, like a breakdown pattern, again, like we saw, like we just looked at in Ethereum back in August, or like we just looked at in Bitcoin in the previous area here, when we had a very seminal distribution pattern, we were in a bullish trend because we were in phase D, right? And that's important to remember. Anyways, okay, point of this. I don't think I'm wrong yet. I haven't changed to bearish. And even if we do break this down, I suspect what we're going to see is something that just goes into a bigger reaccumulation pattern before ultimately blowing up. Please do remember that on February 8th, in just a week from now, we do have Cme Futures joining the game here. And this could be the prime opportunity for some of these bigger funds to take short positions to cover. Now, it's important to remember that even though they're going short, they might not think that the position is going to break down, but it gives them an opportunity to make money on the downside while holding their main position. So we'll go over this in future episodes. Basically, it's how to cover your account with long shorts while you're in a spot position. Say you've got like 10 Ethereum here, right? And so what you do is like, okay, well, we're at the top. Maybe we'll break down. I'm going to take one Ethereum at 10x, and I'm going to go short at this particular LPSY because we've been hitting it. And maybe it does break down. Maybe Ethereum drops all the way to $100. It's not going to happen. But I'm going to do that to cover my account. So now that we have Ethereum futures being added to the market, you may actually see a bunch of shorts that go to protect the account, that try to push the price down to a lower reaccumulation pattern, very similar to what we saw in Bitcoin, where you have this temporary distribution that moves into a bigger reaccumulation before exploding into $5,000, $10,000, $20,000 Ethereum maybe as well. So again, guys, I wanted to use today's episode to ask the question, are we wrong? It's always a great conjecture point. Make sure you bring to the table what you're willing to argue. I had to argue vehemently against people being like, guys, Bitcoin at $400, like, get your shit together. And if you're not that confident about what you're sharing, you shouldn't bring it to the table. Because eventually, I was willing to go down with that. I was willing to be totally wrong, to have been buying Bitcoin at $400 to $600, watch it go to 100, and then keep buying more. I had earned that confidence, and I hope everyone builds that confidence in their own conjecture. And if you bring it to the table and you want to argue about it, I'm happy. I will even argue against what I believe in, just like I'm doing right now. I don't think that this is a breakdown position, but I think it's the perfect opportunity to show how easily distribution and reaccumulation patterns can be slammed into one another. Okay, so lastly, what I wanted to do was finish through the rest of this. Okay, here goes. The composite operator has the intention of staying on the trend for the multi-year move. They expect pauses in the uptrend that could occur along the way in the final conclusion of the move that the composite operator is looking for. We will use these reaccumulation phases to add to our holdings, while Coffeans also use these reaccumulation phases to initiate positions or add to the existing holding that they have. So again, these are in no way bearish for me. These simply represent new accumulation patterns. And if we use terms like bearish, we're going to scare people away who are new. And I just can't allow that. That's why I'm arguing vehemently against it, in case you're wondering. As the trend continues to mature, the activity becomes dominated by trading, and in contrast to investing, for a period of time, accelerating momentum into an uptrend can be very profitable. Accelerating prices have widening price spreads, whether they're daily and weekly, and also show high volume. Upward and downward volatility are signatures of the late stages of the trend and a condition of approaching exhaustion. Recall from our previous posts and trends that a common condition at the conclusion of the advance is a throw over the top of the trend in the channel, and a throw over is a classic sign of exhaustion, and coincides with the buying climax, which is a stopping action of the price. The uptrend becomes so overheated that with speculation that a blow-off price movement ends the advance. The buying climax is the beginning of one or two conditions: distribution or reaccumulation. This is significant because one condition concludes the resumption of the uptrend, reaccumulation. The other is the termination of the uptrend. And that's the big difference. The termination of the uptrend, I still believe, is a long ways away. Even though on Bitcoin, if we look at the pattern that we're following here, we can see that there was a climactic selling moment here, right, that ended the uptrend. But did it end the entire trend itself? No, I don't think so. So this is the condition that we're looking for. The other is the termination, the one that I think we'll reach when we're out at like 6-figure Bitcoin. Mr. Wyckoff can help us to make these important distinctions between the two scenarios by understanding the difference. The condition of reaccumulation and distribution begin with the same action, and they begin in the same manner. This is the stopping action of the prior trend. What follows is a large and often long trading range. Here we are now, sitting in an area from our primary support where we're already 31 days into this reaccumulation pattern. After the buying climax, the automatic reaction or automatic reaction, I call it the shakeout, I think it's easier to name it that way, which is a big deal, and the volatility correlates to that which extends the correction preceding the uptrend. This confirmation of the buying climax, if we were unsure before, we'll label it buying climax and AR immediately and draw the resistance line at the peak of the buying climax and a support at the low line of the automatic rally. So this is what we've done. Here's the top of the buying climax. Here's the low of the automatic rally, or the shakeout, as I like to call it. And again, here is the primary distinction of our trading range, here and here. Perfect. So we apply the same technique after the selling climax and the automatic rally establishes the boundaries of accumulation. Very similar to what we looked at in the multi-year process prior to this. We look for the trading to become largely contained by the support and the resistance for weeks and maybe months ahead. Okay. Well, there's another point of the conjecture. We might have another month or two. And I've said multiple times that the real bull market, the one where it goes almost just straight up and parabolic without any blinking of the eyes, is probably going to start in March. So let's say we do this between here and March. We fumble around in this area. Maybe we even make a spring to 24,000. And by March, we're exploding. And this would maybe correlate well with the previous area that we were looking at, which was this potential for a bull flag. Again, ultimately still a bullish signal, but it could correlate well with this falling trading range where you see something like this, a spring down to the $23,000 area and a breakout. Either way, both of these are bullish to me, so don't get scared. That's all I'm trying to, the reason why I'm trying to reiterate this sentiment so often is because you don't understand how emotional people get about their money unless you've got skin in the game, right? And the last thing I want in the group is people to get emotional because they saw the word bearish and in the middle of a bull market. So we just have to be careful with nomenclature, I guess, is the end part of that study. So we look for the trading range to be largely by the support and the resistance of the potential months ahead. Initially, we look for a series of secondary tests. Okay, this is what we've been looking at right now, a series of secondary tests. And currently, as long as we stay above here, our primary support from our shakeout, everything looks dandy. And not only that, we've got our secondary tests that have already done that. And it could take us into March. So I'm leaning into the horizontal trading range, but it could very easily be a falling trading range. Both are bullish in my mind. And again, the importance of understanding this. Weak holders of the stock are being shaken out by the volatility. And that's what I'm trying to stop from happening. That's why I'm arguing a little bit. I apologize. The AR will scare the short-term momentum traders out with some wicked losses. And all this happens very quickly. But thereafter, the careful observer will see the volatility is receding. And this is what we've been looking at. If you look at this, specifically for Ethereum, you can see the volatility decreasing within the volume itself and a rising price momentum, which looks bullish to me. In Bitcoin, if you had gotten rid of if you had gotten rid of Elon Musk's middle finger fuck you to the system, you would actually see a declining volume set as well. And if you basically ignore this and potentially call it noise, you can see that since our shakeout, we've actually been declining on that volume set aside from this one big fuck you candle, which is, let's call it noise for now, even though it's not necessarily. Okay. Decline support will take longer to complete, and the volume will generally lower to each succeeding range, so again, at the bottom of the range. These trading ranges grow longer and longer. Traders' pessimism is on the increase, as I can see from the chat. Oh, Arcane Bear, if we go to 24K, isn't that invalidating the fact that we are in accumulation now? Absolutely not. It is not. It is exactly designed to do that. Increase the pessimism of the average person and investor so we can shake you the fuck out of the system and I can buy your Bitcoin for 24K. We are in the early stages of this bull market, guaranteed. You just have too many big players. This is drastically different. Okay. So the composite operator will use this turn of events to begin accumulating more of the asset. Just as the initial accumulation, which we looked at, the composite operator will systematically absorb shares as prices correct towards the support and cease buying activity after the price rises back to resistance. And that's what you can see. This big fuck you candle wasn't supposed to be there. Their buying has been decreasing because they want the price to get drawn down by the scared retail hands so they can accumulate at lower prices. Even if we dip to 24K on a quick spring, beautiful. That's what we want. That's what the composite operator wants. He wants pessimism, like the person who just said that comment in the group, so that they can buy your Bitcoin from you, because they know better than you do that they don't care. They're not worried about a few $1,000s of like price decrease at all. They're like, great, I've got billions of dollars in capital sitting on the side here. Like Grayscale just bought another $1 billion in Ethereum this last week. Like, get real. We're still in the middle of this shit. They bought another 600 Bitcoin like 2 days ago. They want that price drawdowns in the retail market so that they can accumulate it. Even if we get a spike or a spring like this, which again, you could see our POC line from our previous trading range like this, you wouldn't even, I don't even think you would be able to log into an exchange to take that trade. Look what happened when we exploded to here. Coinbase didn't work, Binance went down, Gemini wasn't working for a minute. Everyone's crying wolf. This is what happens. The system gets overloaded. So if we see a spring, it would happen so fast, you'd be asleep, you'd blink your eye, and before you know it, we'd be back at $38,000 in less than a few days, most likely. Okay, so finalizing this, it becomes harder and harder for the price to return back to the sort, and this will be reflected in the vertical bar, again, which we are looking at here. This area, more specifically, the primary area of focal resistance or a support would be at around $19,000 to $23,000. I think 23,000 is the much larger potential, and it would dip so quickly. I doubt you would even be able to get a buy off unless you already had it set. So if it's harder for the price to return back to the support, it will be reflected in the vertical bar chart. That's what we're looking at with the volume, and the price ranges will and generally diminish in volume, again, which we were looking at here. Aside from the big FU candle, we were seeing diminishing volume. Different story. That was just like, oh my God, Elon Musk made a tweet. A common mistake traders will make with reaccumulation is to conclude that it is distribution and they initiate short selling in the campaign. We'll study this in detail, but for now, let's take the key points to be made during distribution volatility. Volume will increase, and that's not what's happening. You're not seeing a distribution with increasing volume at the moment. You're seeing a decrease in volume aside from this one crazy fuck you candle, which is like mostly let's call that a noisy moment in Wall Street bet in Elon Musk history. So this distribution volatility and volume increases the trading range, market matures and prepares for the bearish downtrend. During reaccumulation, the opposite takes place and the principles of absorption. And that's what we can see here. And that's what we can see here for Ethereum as well, is that volume is decreasing, which again, leads me to believe that we were right the first time, that these are not the breakdowns. These are secondary tests. And instead of a UTAD here, what you're witnessing is still a micro SOS before you see a big breakout. And again, you could see a shake here that does this just to try to get everyone out of, like, just to scare people here, right? Again, because that's literally what accumulation is used for. If you weren't here in the multi-month process, we're like, guys, bull market, bull market, bull market. This is a lot harder to study, and it's a hell of a lot harder to get good at. So just be patient. And again, do your homework. I can't suggest that enough. Look at the declining volume. Look at the declining volume. This is the maybe even more distinguishable in here. Again, yeah. Again, the main point here would be that fuck you candle was just a random event. I could make an argument that there is never a random event in history, but I would make the distinction that that one was. So we'll draw a nice hard line here, and we'll keep an eye on this. If we see volume start to increase massively here, that's a different story, but currently that's not what we're seeing. We're seeing the large composite operators try to shake out the weaker hands and convince them that it's distribution. So reaccumulations have various looks, and here's one example. Absorption is occurring as the trading range progresses. With the creek, we observe diminished volatility and volume, an indication that the reaccumulation is nearly concluded. Once absorption is complete, the jump across the action will take place. So again, I think what we're witnessing right now is just this one random spike is basically like this one random moment that it's not really correlated. We're seeing a fairly distinctive decrease in volume, and you can see that. There was no price rise or volume rise since the shakeout. It's been flattening. So this is where the Wyckoffeans start getting busy adding shares to their portfolio. So distribution, on the other hand, is much different. Here you see a rising increase into the trading range itself. And then again, the final break point would be a massive sell point. So we could be invalidated here, right? If all of a sudden you see volume start to increase or supply start to increase massively, sure, we could see distribution, but I don't think it would even, at this early on, I bet you it would be nothing more than a spring. And I bet you if we characteristically look back, it would probably fit within this downsloping range. Again, you got to give yourself some buffer room here. Otherwise, you're not doing anyone any justice. Okay, so reaccumulation phases are found in all trading ranges. Again, it could be very, very tricky, right? Because you see rising price to the beginning of the trading range, and you see a fairly flat, almost horizontal aspect into the spring. The spring was characterized by massive absorption, though, and that's one thing that we haven't really seen yet. Would be a nice sell and absorption candle, which would be one red, one green, that were pretty much equal size together. That's kind of a nice characteristic of the spring, as much as you can see here, like. And here the opposite. A massive amount of supply came into the buy side, but very little price movement to the upside. Okay. In the future, let's see here. In the future, we'll drill in and study more. Okay, yeah, you should just always be studying. Anyways, guys, I hope that was helpful. Again, the reason why I wanted to make this argument against myself and look at Ethereum too is because clearly the volatility is leaving and the supply is decreasing. That's an important characteristic of reaccumulation, not distribution. And more importantly, had you thought that we were in a distributive process in Bitcoin back here, and you were ignoring the macro perspective, which is a lot of people will do by accident, you would have exited your position in Bitcoin thinking that this was a distribution pattern, right? You're like, oh my God, we're in a distribution pattern. Here's a rounded top. And it did for a second. But if you didn't re-enter here, you're like, oh, I think it's going to distribute again. Like we're going to 3-4 grand. We want to touch the bottom of the trading range here. You would have not been in your position. You would have missed the entire rest of the bull market. And again, if we make further conjecture and we look back previous to what Bitcoin was doing in 2017, let's edit that. Let's go back to the daily. You can see something very similar happened. We had our primary reaccumulation ranges. All these were quite a bit more volatile. 31% on the first one, approximately 35% on the next one. It got a little thinner, and then this is where people would be like, "Oh my God, it's distribution." Let's go right here. This 4-hour. That's too far. How do you scroll through days easily? Jesus. Okay, there we go. That's faster. All the way back through time here. Here's the selling climax. Okay, here's our two previous support ranges before the blowout. Right, so let's imagine this right now, right? Let's imagine this is where we are in Bitcoin today. Okay? That we're talking about, and this is like another, basically a rounded top. Although look at the volume come in here near the top, massive amount of selling that really kind of hit this top range. We haven't seen that yet. And say you're like, oh, I'm going to exit my position here and I'm going to hope to buy back in here. Yeah, right. Good luck. You're going to miss it. Even if we drop down to 23,000 on Bitcoin, you won't be able to log in. But if you do want, this is a great time to set up buys. You should already have those buys in place. I think having buys 19, 20, 21, 22, all of that, why not? We could go that low, but you won't be able to log in and buy at that moment. It'll be next to impossible. And again, the downside here is what you would miss is the crazy parts that came next. And you don't want to do that. So guys, I know some of you in the private den can get emotional with your keywords, and you're like, oh, this is a bearish top. It's like, yeah, it's not. And you're gonna make disastrous mistakes for your portfolio, because here again, this was a rounded top, sure. But if you didn't realize that we were in a multi-year accumulation in phase fucking D, you would have exited your position and you probably wouldn't have got back in. And you would have waited till maybe here or here if you were lucky to get back into that position. Anyways, that's the end of today's episode. I love you guys. I truly do. Thank you to all the private bear members. Remember, guys, do you think you're adventurous? Do you like learning new things? Then join our private membership. Give it a shot. We're going to continue to do live videos every day. I might even actually, because you guys, a shout out to Mike and Michelle, who both shared some really fun things the last few days in our private group. One of the things I want to highlight there is I'm going to make a video about just my general life, so this channel is more personal for you guys all the time. I think it's important to do so. I only wanted to go over Bitcoin and Ethereum today because I think that those two are in the perfect conjecture for reaccumulation versus distribution. Again, I'm not trying to pick on anyone here. You need to have some serious level of confidence in your argument. Otherwise, you're going to get shaken out right before the bull market starts. And we have hundreds and hundreds of people in our private group. So I want to keep the emotional wording to a minimum. We're nowhere near the top of this bull market, in my opinion. And a lot of the people that are like supposedly the Wyckoff, like analytics and Wyckoff's, the people that have been studying, they missed all of this. They missed the entire fucking trading range. That to me is not a good sign. If you missed the whole beginning of the bull market, like how the fuck do you think, why would you trust them now? Not to like shout down on them or anything, but really, like you missed the most important part. Anyways, it's Tio with the Arcane Bear. Thank you guys all for joining us. Give us a thumbs up if you like this content. I really hope you guys enjoy this. Flute, okay, I'll do the flute for any live stream. And again, I'm not trying to pick on anyone. I love you guys. I'm seriously super grateful for each one of you. I love to argue. It's a Jewish tradition to basically be able to argue and not to just to die for what you believe in to some degree or another. You have to remember that some people were persecuted for their beliefs over time, and whether they were right or wrong, they were willing to die in their argument for that belief. And that is a whole another level of conviction. I'm not willing to die to think that Bitcoin's going to go to $280,000. I'd be like, oh, maybe I'm wrong. Like, maybe I just won't even invest in Bitcoin if that's the case. Then, like, what do I know about But I'm not here. I'm not going to die. This is only money. I could literally lose all of my money, and I have so much confidence and conviction in what I know how to do for my trading and my business and focus that I really don't care. I could go all the way back to zero, and between my network, my competence, and my kindness, I cocould climb myself all the way back to a top. So this is Tio with the Arcane Bear. Thank you guys all for joining us. You guys want to always like when I end it off with a little bit of music, so I will do that. I appreciate the support. Let's take a look here. We'll do it like something like this. With the Arcane Bear. Thank you guys all for joining us today. Give us the thumbs up if you like this eclectic content. We will, I love going over stuff with you guys. One of the important things here to remember is that I basically try to ignore any other pattern in trading range. The Wyckoff is the best. I've watched all these other people. They've been wrong. You might as well just flip a coin and invest at that point. And again, remember, tomorrow's video is going to be called Why Some of the Best Investors Are Dead. Is because they just never touch their portfolio. Literally, like, if you want, just keep investing over your lifetime and never look back. You can do that. You don't need to be like, oh my God, there's fractals and we're like a third step of the Elliott wave. It's like, shut the fuck up. Just go invest. Go do something better with your life then if you don't know what you're doing. And you'll make more money doing that. Shit. Why not, right? That's a great strategy. You should have two different portfolios. One that's investing where you pretty much pretend that you invest at all. You don't pretend, like, you forget that you invest because that will work out really well for you in the long run. And then secondarily, you know, play around with trading. It's fun. You learn a lot. And there's great ways to hedge your account when we get to the top. And when we get to the top, you can be damn well sure I will be doing that. But not today. Today, I'm going to be waiting. We've got like another few more days into this month because it's almost February, and I'll be buying more Bitcoin and I'll be buying more Ethereum. Awesome. See you with the Arcane Bear. Thank you guys all. We'll see you tomorrow. Tomorrow is Monday. That's super exciting. I might get two videos out tomorrow. One that is a live stream where we do this, and the other video will be The Best Investors Are Dead.